Senor Ortiz, we are live. Are you ready to kick this thing off, brother?
All right, let's go.
Do it.
KTTV, giving you what you need. Motivation, education unleashed. H-Town representing, we forever keep it rolling. Join the conversation with inspirational stories. Thought-provoking, feel that energy. Kendrick Thomas aiming to lift the community. True indeed, tune in, come and see. Giving you what you need. KTTV, let's go. Hey, KTTV. Hey.
What do KTTV? This is KT, and I am back with my co-host,
JoJo, baby.
Administrators Podcast. Look, y'all, I ain't gonna lie to you. Some days it be hard, man, because we try to do our pre-taping on a Sunday, and then sometimes we be out on a Sunday, and then you say, well, we'll get together on a Monday, but then work be crazy on a Monday. So right now, we just want y'all to bear with us, man, as we kind of get back into a normal schedule since I'm just getting back to my real life, man. But other than that, man, now that we can kind of explain to the crowd, man, how we be hit and miss in some weeks, how you feeling, brother?
You know what? I'm feeling really good because we got 1 week before the break, man. And it has been one heck of a semester.
Look, man, and you know what they say, we still, well, at least we got to get to halftime, man. Golly. So look, man, I don't know if we talked since then. We may did, but playoffs came out.
Man,
Notre Dame was not in there. I just want to know how you feel, brother. What you think?
Well, I think, let me start off by saying you got to win the games you got to win. So
okay.
I don't want anyone thinking that, you know, you lose 2 games beginning of the year and then you win 10 in a row by 30 points. Let me add, you win 10 in a row by 30. But I think what any Notre Dame fan is mad about, including myself, is the fact that for 6 weeks when the playoff rankings came out, they always had Notre Dame ahead of Miami. And not one time during those first initial 6 weeks. Now, let's remember, Miami beat Notre Dame game 1 in Miami with a freshman quarterback for Notre Dame, a new defensive coordinator, and they lost by 3 points. So, not to make an excuse for a loss is a loss, but if they were ever going to put Miami ahead of Notre Dame in the playoff rankings, they should have done so when they first came out. But I think what really got everybody mad was the fact that BYU played in their championship game, got blown out, and got kicked out. And Duke won the ACC championship, but they didn't get put in. But their number one criteria for keeping Alabama in there was, we don't want to penalize someone for playing in the championship game. Yet they did it to BYU and they did it to Duke. And so for them to keep Alabama in there with their 3 losses, I feel Miami and Notre Dame should have gotten in over Alabama. And so I think that that's what caused the uproar with Notre Dame leaving their bowl game, because they were mad about the fact that you've made all this money off of Notre Dame, being the fact that you had this playoff system. Notre Dame was in the playoff system. You're having to show, and now all of a sudden you kick them out. And Miami and Notre Dame, neither one of them played a game, but yet Alabama got beat down by Georgia. Yet they kept them at number 9. And so, do I necessarily agree with the not playing in the bowl game? When I heard someone break it down for me about the money that Notre Dame makes or generates for the television outside of NBC, and what they generate for ESPN and the ACC, because ESPN got SEC, ACC, ABC, all that on lock. And so Notre Dame was like, you know what? No, we're not going to play at all. So to make any money off of us. And it would have been a great game from what I hear, them versus BYU. But, Notre Dame said, you know what, man, we're not going to go, and we're not going to be caught up in that. Will Notre Dame join a conference? I doubt it. I seriously doubt it. And if they did, I don't blame them for joining some sorry conference and saying, okay, you want me to win my conference? I'll go play James Madison every year, Tulane. I'll go one of their conferences. And then
American conference.
But yeah. So, I mean, I'm a little bitter because, dude, I think Notre Dame could have whooped anybody in that 10, in that field of 12.
One of them things, man, everybody was shocked by that one, especially when they said, oh, yeah, no more bowl games, anything like that. Like I say, I don't dig too much into it because I'm an NFL guy, but I do know the world was pissed with I was like, man, come on, man. Yeah. Hey, well, I guess what you think about these markets, man? It's been rough out here.
It's been rough. I don't know what happened on Friday, but Friday was rough. I thought we were starting to go a little bit up.
Yeah.
Especially when you look at the fear and greed. But I guess everybody was waiting for them to make that announcement. CPI was about a little bit the same, maybe a little bit better, but I think Friday, I don't know what happened Friday. It was bottom fell out.
It is getting rough out here. I hit a few leagues last week. I hit that Affirm, man. I rinsed and repeated on that Affirm a few times. But yeah, like I say, I seen that. See, what happened is now I began to say in pre-market, if I see something, I go ahead and kind of look, wait for it to go up, and then I jump. So the ABGO, I seen that it was already down like $20. $25 in pre-market Friday because of the earnings. And so lo and behold, I said, okay, let me get a little bounce, jump back into it. And man, that thing went down a nice little chunk. And so I really bought another put at the end of the day just to see what's going to happen tomorrow and to see if that thing going to keep on coming down or what we going to do.
Right.
It's an area I jump out tomorrow, but yeah, we're trying to find out. But the biggest thing, man, is a lot of uncertainty out here. We just getting caught up with the job numbers, so we'll talk a little bit about that in the news, kind of what the horizon looks like for next week. But other than that, it's a lot going on, man. So the money is retracting. Well, man, what we'll do, let's take a quick break, and then we come back and get into some news, man. All right, y'all, let's jump into some news. All right, in today's story, we are talking about kind of jump to next week and what we got going. According to tradingview.com, big shouts out. Jobs and inflation data are coming, plus Lennar, General Mills, Micron, Nike, and more stocks to watch this week from Barron's.com. So last week, equities performance diverged last week after investors got the rate cut they wanted from the Federal Open Market Committee, or the FOMC. And despite the Federal Reserve Chair Jerome Powell attempt at a hawkish press conference, traders see more rate cuts in the year ahead. The Russell 2000 index, the small cap benchmark, hit a record high Thursday and closed the week up 1.2%. Small caps are more sensitive to interest rates, and the potential for a dovish new Fed chair could herald a new dawn for small caps, which are lag behind their large cap brethren's performance by more than 7 percentage points annually over the past 5 years. What to say? Normally, Wall Street can take it easy after the December FOMC meeting, because it's usually the last big macroeconomic event for the year, but not this year. According to Barron's, this week, investors will get an update on both the labor market, which has been weakening, and inflation, which has stubbornly stayed above the Fed's 2% target. This tension is what has left the FOMC deeply divided, with dissents in both directions at the last two monetary policy meetings. Because I remember it was one person said they wanted to go cut by 50 basis points, and then you had some of the people saying 0 basis points at all. So I guess they met in the middle, which is how we got the 25% basis point. So what we'll do, let's kind of look at what we got for this next week coming up. And so Monday, which tomorrow, the National Association of Home Builders released the housing market index for December. The consensus call is for a 39 read, 1 point more than in November. Readings less than 50 indicate that home builders are pessimistic about single-family housing market in the next 6 months. Well, 39 is less than 50 according to my math. So it looks like we got some people out here. Lenore reports their fourth quarter fiscal 2025 results. And it says the BLS releases the jobs report for November along with the partial October data that was delayed by the government shutdown. So I want to say, Jose, and correct me if I'm wrong, but this week we will just be getting caught up, and now we will be getting real-time data. I want to say the last 2 times we got data, it was delayed data that was coming out from it, but this is going to be what's happening in real time, if I'm not mistaken.
That's correct.
Okay. So it said job growth has slowed this year to 76,000 a month on average through September, less than half compared with the same period last year. Even the 76,000 figure may be high, as Powell said this past week. By the April through September jobs data might have been overstated by 60,000 a month. What? That's crazy. So Wednesday, we got General Mills, Jabil, and Micron to hold conferences to discuss their quarterly results. MU has been on the test, so that's something to watch. Accenture, Birkenstock, Centos, Darden Restaurants, and a few more others looking at FedEx in there too, because just trying to see what's happening with them. I think they've been under a little pressure. The Bank of England is expected to cut its key interest rate by 0.25%. Meanwhile, the ECB is expected to leave ears at an unrated change. And then Friday, we got Conagra, Lamb Weston Holdings, and Paychecks. The Bank of Japan announces its monetary policy. They're expected to hike its benchmark. So that could be something to watch as well. And the National Association of Realtors report existing home sales for November. Economists forecast a seasonally adjusted annual rate of 4.15 million homes sold, slightly more than in October. The median sale price was existing home was $415,000 in October. Golly, man, who are these people? They balling, man. Yeah, or either house just high as hell. Hey, man, what about this, man?
What'd you say?
I say, what you think about this,
man? I think one of the things that we've been talking about, and I heard something earlier today about money being injected now into, so I think we're going to get some good news for a little bit, but then we have to worry about what happens after that with inflation. We do have the holiday spending coming up, but that $415,000 for the housing, man, that number jumps out. I don't know if that's where we're going to be at, moving forward. How realistic is it now to buy a house compared to what it was? Will these interest rates go down? And I think some of these earnings that are coming up, man, Micron, I remember when Micron was an $80 stock. And now we're in the 200s. And so we'll see. Some of these stocks have been going up. And so I think that whether they have good or bad earnings coming up, I think they might, lose a little bit of steam just because they're completely overbought. So we'll see what happens next week, man. And
got a lot of that tech has been getting a beating, man. My God. Yeah. All right, man. Let's take a quick break and get back into some heat check.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up. You see the drippy, I'm fitted up. Hop in my car and the
heat check. All right, y'all. Welcome to the Heat Check segment of the Administrators Podcast. This is where we take the temperature of the market so you know exactly what's hot, what's cold, and what needs to stay off your plate. For real. Yeah. So I guess the first thing we'll look at is our fear and greed index. So let me see if I can share this real quick. I don't know why I stopped the sharing. It's crazy. Hold up, let me find this here, and we're gonna share our fear and greed index because it's crazy out in these streets. And as you see, we are sitting on a fear greed index. Now remember, fear pushes the price down, greed pushes the prices up. When fear is high, you get discounts. When greed is high, you get danger. Educators know this rule. So emotions drive our behavior, and the market works the same way. So what we need to do, when the heat is low, you scale in. When the heat is high, you protect your pockets. And where are we at right now? We are at some fear, but I want you to kind of look at where we were. So the previous close was a 46. We had made it into some neutral. 1 week ago, we were at 38. 1 month ago, we are a 34. And 1 year ago, we were a 47. So we still are around the same place as we were last year. The only thing is the fear is growing, right? And so I would definitely say, I don't think we're sliding, because you got to think we were here. I thought we was getting ready to push over here, but not so much. So we're right here, but this is not saying buy, but this is saying things are at a discount. Buy this dip, right? Don't go all in, but it still start putting a little. Because while we still have some room to get over here and get back to extreme, you just never know what will happen, especially when we got this data that's coming out, man. What you think about this fear and greed index, Jose?
I think if there are people been, even the last time we came on and the time before that, I think we've had a couple of shows now where we were in extreme fear. And if people were listening, we said to buy some stuff. So if you collected anything between the time, a couple of times that we've been on now, when we were in extreme fear to now fear, you've made a little bit of money. So like KT said, it's time, if you want to protect it, or if you want to nibble here, nibble there on something else, just in case the bottom drops out some more, because the bottom was gone down on Friday. So we need to anticipate a reaction either way. Mm-hmm. Just keep in mind, if we get a full steam of ahead either way, whether we're headed toward that greed or headed toward that extreme fear, just to be cautious on the amount of money that you have in, because they always say cash is king. So you may want to be ready to jump in, but you got to protect that money. Because remember, money's your biggest asset.
Yeah, cash is a position. The biggest thing I've learned is, where are you buying that stock at, right? So you got a lot of people that will buy here, but then you got some people who will choose to go all the way over to the greed, and that's where they start positions. Remember, even more important than the asset you buy is the price that you buy it at. So just making sure that you're watching your entries. We'll get into it. Jose, you gonna look at a little SPY today? You got anything up like that, or should we look at it now?
But let's look at the SPY now, because I was going to look at some Tesla and Nvidia, and then I'm throwing some stock in there.
Yeah, let's look at a little SPY over here, kind of see what we've been doing. Okay, y'all. And so I want to go to our 1 hour chart, then I'll start sharing. Okay, share this tab instead. Let me take some of these lines out of here. Y'all know how I do it. All right. So this is what we got. Man, it's looking rough out in these streets, man. I think that much. Let's see if we can zoom out. Damn. All right. So now this is what we got for our SPY. And as you can see, it's been some rough times in Ridgemont High. A little bottom right there. And ever since then, we have been on a tear. But let's look at what's been happening though. So right now, this is our 1 hour chart. Matter of fact, I'd even come out of 1 hour chart. Let's go to our daily. Go to our daily chart. All right, man. So Jose, what you seeing in this thing, man?
So if you take a look at this, if you notice where we ended, we had a little bit of a drop off, but SPY has been, coming back. We were touching 680, 690
Yeah.
And so we had talked about SPY before, where we were starting to, if you see where all that red is, right toward that line, that dark gold line, you can see where it's almost a V-shaped recovery, but it's something that we had talked about. We had talked about the steady decline of the SPY and how now we've got this jump. Now, the difference was that on Friday, for some reason, we lost momentum, but I think that was just everybody had anticipated the news. They came out, and now since we had been up, we had a reason to go back down, and people were taking profits. So I see this as can we get a continuation of the SPY from where we were at to where we've gotten in a little bit of a, uptrend that we've started. So that's what I see as far as what we're going to be looking at, the SPY, different levels of getting in if we make it, but definitely keeping an eye on the momentum going forward that we had going into Friday.
Yeah.
That's what I see.
All right. And while we are here on our daily chart, let's kind of look at some numbers. So I told y'all I always like to chart this thing in real time so y'all can kind of see. Well, what I said I'm going to come do is put a yellow line at the end of day on my last 1 day chart. So that tells me where we're going to test. All right. So then I come over here and I look inside of my lines that I made. And so my rule of thumb is I try not to buy in the middle. Either I'm waiting till we get right here. So I'm gonna put a alert right there, or either I'm gonna wait till we get an alert right here, and then I'm gonna make a decision. But sometimes you got to pop out that thing, right? But what's telling me right now is look what's up at the top. My 200 is way up here. So that automatically tells me we could be heading to a downtrend. I want to go as macro. Let's go back up to this 1 hour chart. So now when we look at our 1 hour chart, right? Look what happened when we got to that line. This is why I keep these lines. Right? Look what happened when we got to that line. Bounce. Right there. What happened when we got close to that line? Because remember, it doesn't necessarily mean it has to be like figurative at this line, but look, we still got to push. We still got to push right there. So that tells me that when we get down here, some people have been supporting it. Even when we look at the last hour of the market, we still have some buyers come in at the end of the day, right? So that will be something we're looking at. I really can't do too much charting outside of this because a lot of it left is going to be in my pre-market. But if we wanted to do something quick, let's say we can go back to our 1 hour chart. And so let's look and see where we got some lines here, right? So, man, I know this is definitely one. We'll chart right here. And that's where we got a little support that should be happening. Kind of look at that one. We go back up here. Got something. Like we're going to support up here. So if we break, that could be our next step. Trying to see if we fall below that line. So look at how strong that line is. Even if you go all the way back over here, December 2nd, right? December 3rd. So we really been bouncing off that line, which is a strong place to go. In the event that we don't do that line, then we're going to come back over here and we got a little bit more, and Jose, I don't know if you do it like this, man, but whenever I really want to look, I get my lines. And then anytime that we got like a little fold like this is where I'm coming, man. I'm drawing my lines right here. And so that's how we finding that support. That's how we finding that resistance to just kind of make sure that we do. And my rule of thumb is to do 3 for each way, right? But this just taking a look at the SPY, kind of seeing where we are and where we could be heading. Right now, we are around this 200 on our hourly chart. And so, yeah, right now you might want to just look and see what we got. All else fails, you kind of waiting until we get back down to 679. Because in the event that you play around here, who want to wait and hold the bag until they get all the way, right? So just kind of watch. Remember, tomorrow is Monday. Make sure you just go half in and then just kind of look and see what you got going. even on our 5-minute chart. Yeah, we still could be heading down, people. We still could be heading down. And else be here. So we got here. We got here. And worst case scenario, stop right here. Man. Oh, it's rough out here in these streets. It's rough out here in these streets. We're going level to level. All right, so that'll be it for SPY. Just to kind of get you a little section in there. Right now, something gonna definitely have to happen for us to say we're gonna be back into an uptrend. All right, next thing we got is our heat map. So let's look at this heat map real quick. Bam. Okay, so in the heat map, today's hottest sectors are what we got for the heat. Financials looking pretty good. Consumer discretionary looking good. They got some green. Consumer staples, they've got some green. That's why I want to look at that target, because some of our consumer staples and financials are coming back because we got rate cuts, all of those pieces, which tend to make our banks a little happy. Even Netflix doing something. But then when we come over here to our technology and our semiconductors, good Lord, it's no them things, man. So I don't even know what to say about these, man. But what we can see, and we always know, is there's always an influx of money going somewhere. So right now, people are pulling it out of tech. And from this map, we can kind of see where people. All right, here we go. We got action. Look, man, there's too much going on in these streets, man. Okay, man, we are back.
Well,
all right, hold on. What you think about
that market got us?
Yeah, look, I'm going to say, yeah, bro, it's trash out here. Dang.
All right. Well, I think what you were saying earlier about those semiconductors, man, and I'll get into NVIDIA later on. But man, I'm telling you, that one point on Friday, it was just like, bleh, a bomb went off. Everything just went down. So, but we do got some green. I think the banks were green for a little bit, most of the day Friday. But you have a lot of the tech stocks that influence your QQQ, your SPY. And so it was just one of those, man, I remember when GE was $30.
Man, this is terrible. Man, we missed that one.
God.
My God, man. Yeah, man. All right. I guess let's go back and look at now let's look at this VIX, man. See what we got going on out here, man. So Darren. All right. So this is the volatility index report. Basically just kind of showing you how people are afraid out here in these streets, how their money moving. And so usually the higher the VIX, the lower the market. So you got to think about, when we get a 17, that means things was terrible out here in these streets. This was us kind of coming down. Was this Friday? What was Friday? 12/12?
Mm-hmm.
Yes, let me see. Friday. So this was us Friday. Started today out, kind of going up. Things went crazy that morning. Then we started leveling off. Then lo and behold, some crazy stuff happened again. So right now we're at a 15. The previous close was the 14. 52-week range is 13 to 60. The days range was a 14 to 17. So we right around, well, if you can see, we did move up higher, and we closed higher than our previous close, which means that things are getting a little shaky out in these streets, man. Anything on that, VIX?
Just going back to where it was, though. I mean, I think we're seeing some little bit of shift because it was killing us there for a little bit. But yeah, I got to be careful with it. 15. We don't want it to get back into the 20s, but if it does, I think we got a good opportunity to do some nibbling.
Yeah, do a little nibbles. All right, man. Okay, I think that will do it for the heat check. What we'll do, we'll take a quick break, and then when we get back, we got that trading with Ortiz. All right, y'all, let's take a quick one. We'll be right back.
You see the drip, yeah, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drip, yeah, I'm fitted up. Hop in my car and the
Love the chase and the hunt, and I set the pace.
All right, y'all. Welcome back to the Administrators Podcast. This is KT with my co-host
JoJo, baby.
Hold up, man. We got the new sound. I don't know if people can hear it, man, but hold up. Let me see what the. Could you hear the money counter, man? Oh, could you hear the money counter, man?
I can hear it.
Yeah, look, man, we got the money counter out here today, man. So, usually when we go to trading with Ortiz, that's pretty much what it sounds like if you kind of listen and follow what's going on here, man. Just get to the bag, man. All right, man, what you got?
All right, man, let's get this. Share my screen real quick. All right, so let's take a look at Tesla. NVIDIA first. We were talking about semiconductors earlier. We were talking about just what's been going on, but let's see what's been going on with NVIDIA. And so last time we spoke, we had hit the double bottom. We did do a little bit of movement up, not enough to take a lot of profits on whatever we had long term. But if you did play it right, you were able to take something. We're talking about what NVIDIA was not too long ago, 195, even 208. And then right now we're at 174 with an RSI of 36. And let's look at our MACD. Our MACD is about to close in. So I do see a double bottom here, a triple bottom at around a 174 where we're at now. But if you see what's been happening, we have been, going down at least $10 off the top that we had when we first bounced off our initial double bottom. And now we're going to have a triple bottom. And so I would definitely keep NVIDIA on the radar. We do have calls. We have calls all the way out through June and January of next year. So we are looking to add to any more. And just in case you're wondering, those calls for next year are 350. So we do have 350 calls. That's almost twice as much, but we got a year and we don't know what's going to happen when it comes to any news related, good or bad, for this AI push and the AI bubble. And then our other favorite stock that we always talk about is our Tessie. And if you paid attention last time, I'm going to say that one more time, KT. If they paid attention the last time we spoke and we had that double bottom right here with this long candle that started, we are now pushing 457 from where we were at around 384. So Tesla, if you made some money off Tesla, play that machine, play that sound. There you go. And then our other Tesla sound that we love to make.
Oh, love, man. What? Oh, wait a minute. I took that one out. I ain't mean to take that one.
Woo! But Tesla,
hey, man, I lost my Tesla chime, y'all.
There was a lot of hate out there for Tesla. I don't want to, it's we're pushing RSI 64, 65. MACD's at the bottom. It's going to go down. We're crossed with the red on the blue. We got a little bit of movement to go back down. I anticipate a drop to about 440 if we do continue if we go down. We have hit a little bit of a top. So we do have a double top here. 10% would give us $445 from now if we go for a while, an extended period of time. If not, expect a little bit of a sell-off, but I think once we get that RSI back to a good enough 50, we can definitely do some more buying. We also have long-term calls going out through June for Tesla. We did have some March calls, and we did have some January calls, if y'all were listening, that we went ahead and we made some money off of. But one of the stocks that we talked about a long time ago, penny stock, that is in heavily with our AI push, is Rich Tech. And so let's take a look at this Rich Tech Robotics. If we were in when we got in, you know that we hit $7. We did go up to about $7 with this. Let me see if I can get this to squeeze for me. This rough over here on with the mouse pad. But yeah, we definitely up at the top. And then when all that uncertainty happened with the AI bubble shifting, blah blah blah, we lost some ground. And last week, now this is a long-term stock for me, 1,000 shares. I did sell about a couple hundred, right around the 650 area. But then I was able to get back in when we were climbing toward the bottom at around $3, got back in. And so now we're sitting at $4.15 in that area. RSI is at 50. Our MACD is relatively highish right now. So I would anticipate a little bit more of a movement down, quite possibly down in here into the $4 range. Maybe even into the 350 range. I do still believe this has a lot of potential. So if you get in, and if you can get in at 350, that's great. If you can get in anything under 4, that's awesome. Me personally, because we do have shares, we want this to keep on going. But we understand that over time things go up and things go down. And so if it seems like we do get a little bit more of a jump, we might sell a little bit more and then come back in, like KT says, rinse and repeat. But there's definitely something that is long-term for me. And I also did some research out there, and they are also, you can get options on them now. They did sign a contract to have the use of a robot. They are trying to work with Google. And so definitely something that to keep an eye on, Rich Tech Robotics. But definitely go back to that SPY if that uptrend can get there. If not, play it to the bottom. But SPY, along with the market movement, should be one of those that you're watching. NVIDIA, Tesla, and definitely this Rich Tech Robotics.
Most definitely, man. All right, y'all. So I still got our highlights. And so the biggest thing about it is, if you know us, Jose says a lot about the same ones, is because it's only when you get familiar with those stocks that you really get comfortable in knowing how they move. You think about Tesla, the biggest thing, it may give you a $10 move up or down each day. So after that 10, you kind of be leery. But it's only after you trade that for so long that okay, this is what I'm looking at. We only moved $2 today. If things are showing we heading up, I still got at least an $8 more move in potential. But that's just trading it and just knowing what we're looking at, knowing those swings with your certain stocks. So do not be afraid to hang around with your same 2 or 3 stocks as long as you are getting paid. All right, man. I think that'll do it for Trading with Ortiz. What we'll do, we're going to take another quick break. And when we get back, throw some platform probing. All right, y'all. We'll be right back. All right, y'all. In this episode of Platform Probing, I want to look a little bit at Target, right? Because Target has been beat down. Yes, it's been rough out in these streets. So let's take a look at Target. Ticker symbol TGT. So Target is one of the large box retailers in the U.S., sitting right behind Walmart, but servicing a totally different consumer lane. So they are more curated, more brand focused, more loyalty driven. So let's kind of look at some information on Target here. So we see next earning, 86 days. Their volume is usually around 5.26 million, 30-day volume around 7.43 million. So we got a lot of people. Market cap is 43 billion. And so now let's take a look at the earnings. They got earnings for November 19th just happened. So they did make earnings. They were surprised, but not by that much. Let me see. Dividends 1.14. That's $1.14. That's $1.14, man. Man, that's over a per share there, bro. That's not bad at all, bro. All right. So now let's look at the performance. Let's look a little bit more financials. All right. So if we can look over at Target, so the reported for Q15 was 1.3. So they did miss estimates. The reported for Q2 was 2. So they was right in line. Right here, this is what we just looked at. They did have a beat, not by much, but it was, like I said, a little surprise on Target. But now, if we look at the revenue, there was a revenue reported estimate, so there was a loss on there. And not a big loss, 0.20%, but it still was a loss for their time. Now, when we get down to our technicals, right now, we're getting into a buy, but the analysts saying stay at a neutral for Target. So I want us to kind of look at what's going on with it, but I just want us to get a little background on the financials and dig a little bit. Now, let's go to the chart. And I went to my 12-month just to show you where we're at as far as our discount with Target. So we look over here. This was January 19. Target was $60. So right here was when we had a nice bounce, and this was 2020. And look where we at. Almost pretty much that same place from 2020. So that means we got a lot to go with. Hopefully, if they can turn it around. But I do know even if we just get back up to almost our 100, somewhere up in here, like, right? Because we see that we can bounce back up, but it will take a little time. Now, let's go over and look at it. Let's look a little bit more into this Target. Hold on, wait. Where we at? Yeah. All right. So now, important levels that we're looking at in Trading View. Let's go and chart this thing here. And I want us to go back to our one-day chart. All right. So let's look at where we closed. So we got a 98. And we got a 96. So these were our openings and closes of last week. As we can see, what do we got right here? Target is making its way up. So we've been pushing for the last few days. We did hit a little resistance. But what I'm thinking is we are getting close to our 200-day moving average. And so in some cases, this acts as a magnet. And so a lot of the times it will be drawn up to here. It'll be really just all on what we got. So now let's go look at our 1 hour chart and kind of look at some levels. Jose, I'm going to say some big things could be popping because we know what this could be right here.
We sure do.
Hey, we know what this could be right here. So we always can say, hey, we're looking a little flaggish, right?
Little bull flag.
Little bull flag. So this is why I want to call y'all attention to it. So let's go and let's look at that bull flag pattern here. All right, so let me share this tab. So if you look at this pattern, we got our handle right here. So we got the strong uptrend. And I just showed you that strong uptrend. Now we got a little consolidation that's happening. So we go back here. Look at that. Big, strong uptrend on our candle. Then we consolidate, we hit back up. Now we coming back down, but we have not broke our 9 EMA. Our 9 EMA. All we did was came back down, consolidated down to it. So now Target has a decision to make. But for the most part, look at it. It's been respecting that 9 EMA. We dropped down to our 20. But what happened? We came right back up. So now let's look at some of our levels that we want to kind of get into this thing with. So one big level. Let's see where we at right now. Let me take these off. Take these off. So with the inside, we want to say 97.38 is a level. Want to come back down here and look. Got a 96. All right, give me another level to the top. We got this 90. Here we go. We got to push back right here. That's our second level to the top. And of course, our third level is going to be at that 98.24. Anything past this 98.24, yeah, you're going to go in there and get you some, y'all. I'm going to just tell you what God loves, because that means we are headed back to anything past that. Look, we could get here. We're trying to go here, right? Up to that. So we got a 99. That's our next level. If we go past 98.24, but then our next stop is going to be our 200 EMA. And so when we think about where we are right now, $98 to 101, if you swing trade that, you could get you a few dollars right there, just being patient and checking that out. Let's go back to our 1 hour chart, because as we know, things go up, things can go down. So our next level coming down, what we got? So we got our 60 EMA, our 20 EMA, which is right around 96, 62. If we lose that, then we come down here by 96.26. If we lose that, looks like we'll be 95. But remember, this is our low of the day for Friday, right? So we come down here and we break and we confirm under this, you could bet your bottom dollar we coming down to test this 95, 93. So either way, because we can still starting at where we at right now? 97.
Was it 97?
Let's say 97. So either way, that's 97 to 95 or 97 to 101. Either way, we're going in either direction. But we just showed y'all the pattern that we're looking at. So we're looking for this to come out of this wedge. Look, let me see here what I can do. Yeah, so we're looking for this to come out of this wedge. And so that way, if it does break out, of this wedge, and we could have something on our head. Remember what we said? Till I can get.
Mm-hmm.
Yeah, so this is what I want right here. So this is our bull falling wedge. This is what okay, can you see that?
Mm-hmm.
Yeah. So that's what we're looking at over here. Look at our target. We come over here, share this tab. Well, we see what we got. We got our wedge right here. We got some little stuff talking noise right there. Got our wedge right here. And what we looking at, because this is our EMA line, it's still holding. And then we potentially looking right here. Next week, I want to come back and see what we got out of this. But potentially, y'all, we got target on the line. Will this be a short run? You can, but I'll definitely say swing trade it out a few weeks. I have not looked at any calls for this yet. Right now, I just started charting it today, so I'll look a little deeper into it. But it's definitely going to be something that I'm coming to look into for a Monday. And why am I coming to do that? Because our heat map just told us that who is getting the money? Consumer. So we got Walmart up, right? We got, who was that? Coke. We got Pepsi. We got Procter & Gamble. So we got all of these pieces. Home Depot up. McDonald's, Starbucks. All of these are our consumers, restaurants, home improvement. All we know is they ain't tech. So then we got to start looking at where the money's flowing, and then where can we start paying attention to things. And I think that is how we get back over here. So,
can you go to that Walmart real quick? Oh, never mind.
Yeah, let's go to Why the world.
Look at that. So quick story real quick. I give the story about patience. I had Walmart calls for January of 2027, y'all, that were for $115. And I bought these back in June. And for the longest time, Walmart was making me mad.
Yeah.
And so right around, I don't know, October, November, Walmart's still below 100. I'm getting a little mad. I had a little bit of profit in them, so I sold them, and Walmart dipped, so I was happy. But now Walmart's
killing,
y'all. So patience. I didn't have it. I lost my patience. I got tired of them. I got rid of it. Took a little bit of profit, but now if I'd have kept them, woo, man, we would have had some good profit, but I didn't. So remember, moral of the day is patience, especially since it was so far off for that, strike for the expiration date. I should have held it.
Hey man, they say the stock market is just a transfer of wealth from the from the impatient to the patient.
Sure.
They say that's how the stock market is, man. A transfer of wealth from the impatient to the patient, man. So give yourself some time, people. Give yourself some time, because we never know when things gonna move. But great companies will find their way back to the limelight one way. And also so much economics, right? You got to think about Walmart is a staple based, and when people can't buy Lululemon and they can't buy all these high dollars, they going back to Wally World.
Absolutely.
Which is a prime example of why Wally World was under 100, but now it's 116 because economic times are tightening. People are going to start going back to the simple things. So just double check those as you kind of go about your way. But that's why I also want to bring in that target. So just kind of look at what you got going. Look at those charts, those numbers that we looked at today. And then kind of set your plan based on some of those numbers. Not financial advice, but hey. That thing is down in the dumps. But if you go back and look at where Target was in its prime, man, Target was, let me see here. We talking about in 2022, man, 2021, Target was $269.95. That is crazy, man. All it took for them to come out and say one crazy thing, that they had too much stock, they had too much stuff, and they ain't been the same since. Right now, I think things about to turn around. All right, man. I think that'll do it for platform probing. Jose, anything else before we get out of here today, man?
And I think pay attention to the news, everybody, because you never know. So quick, like a light switch, could go either way. So just make sure you're out there looking at that news and trying to keep that portfolio green.
My God, I'm telling y'all, because it's all about managing them positions. If you want to hear that. Hey, we got the towners. All right, y'all. I think that will do it for the Administrators Podcast. We're gonna check on this freezing up. We're gonna get all that together too. Something must be going on, right? He can't be running all these shows off this computer, man. I'm gonna have to get Super Mac. All right, man. Other than that, this is KT
and JoJo, baby.
For the Administrators Podcast, we will catch y'all next week.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV. Is that right?